With spring right around the corner and warmer weather, you may be thinking about starting some home improvement projects and how to finance those big expenses. I'm joined by Jennifer Taylor, president of Field & Main Bank, to discuss home equity credit line. Thanks for being with me, Jennifer.
Thank you for having me.
So what is home equity line of credit?
So a home equity line of credit would be taking the current value of your home minus what you owe on your first mortgage, if you have one, and seeing how much equity is or what is available, the value between what you owe and what it's worth. Then we would use that equity there and set up a line of credit and file a second mortgage on your home. So in comparison to a home improvement project that you just mentioned, a lot of people will just race to their wallet and pull out a credit card. They think that getting those points or those reward dollars are more beneficial. Being proactive and setting up a home equity line of credit is great for a few reasons. One, you're going to pay a lower interest rate. Your credit cards or even a personal loan have a higher rate in comparison to a home equity. A home equity loan is typically around the same rates, maybe a little bit higher than your current mortgage rate. So if you want to see what kind of rate you could get, look at the current market, and it would be sometimes more than 10% less than what a credit card has on there. And a home equity you could use for a few different projects around your house, such as renovating your kitchen. If you want to put in new cabinets, countertops, you know, it's great for a big dollar investment there that's going to increase the value of your house. But it's also great to use it just if you want to upgrade your appliances, just a small one. One thing to remember with this home equity line of credit, it does work similar to a credit card. And a lot of people just get that statement. It says, pay your minimum payment here, and they don't think about how to budget and pay it off in a timely manner. So if you're going to upgrade those appliances and you think that you'd like to pay it off in a year, 2 years, take that amount, divide it out. Of course, it's going to be a little bit more with your interest rate, but make sure you pay that monthly payment, not just the minimum payment.
Yeah, so you're not so it can go more towards the principal and not just the interest.
Absolutely, or else you're never going to pay it off. Similar how people would get in trouble with credit cards.
Right. And when it comes to savings, what about that in regards to the home equity line of credit?
Great question. So a home equity line of credit is also great just for a rainy day. From a financial perspective, we like to have 3 to 6 months of savings for a rainy day. And in today's age, a lot of people just live paycheck to paycheck and they do not have that in savings. So being proactive, having that line of credit available, so when your HVAC unit goes out, it's July, it's 90 degrees, and you don't have any air, you're not worried about how am I going to pay for this. You can always use that home equity line of credit.
Right, and if people want more information, where do they go to?
Yeah, you can always visit our website, but we would be happy to take your call one of our offices and talk to one of our mortgage loan officers. And they'd be great resource just to kind of talk you through it.
Yeah, great. Thanks so much, Jennifer. Well, if you're interested in a home equity line of credit or just more information, visit your local banking center or visit fieldandmain.com. This has been Martina Barksdale with another Financial Fridays. We'll be back more with Everyday Kentucky right after this.